European markets in the green thanks to the judges in red. Germany's Constitutional Court approves Berlin's participation in the Eurozone Rescue Fund, sending the euro, stocks and Spanish and Italian bonds all higher. I'm Jamie McGeever and this is today's Market Pulse. Reuters FX analyst Neil Kimberley joins me now. Neil, I know you're a bit of a cynic and a sceptic, but you must recognise this is good news.
The market wants to believe, Jamie. I'll be perfectly honest, I would have done my boots since the ECB meeting trying to short this euro, because as far as I'm concerned, this whole deal ranks up there with Santa Claus, the Tooth Fairy and the Easter Bunny. I don't believe in them, I don't believe in it, but the market believes in it, and you don't do yourself any favours by standing in the way of a steamroller. We've seen this thing move up, and it's been like the Grand National, if you like. Last week was Beaches Brook, a very steep hurdle. We're over that. Today, market expected the court to come down broadly in favour of the ESM. That was the canal turn. A slightly lower fence, we've got over that. Now we've got one massive hurdle to get over, which is the Federal Reserve, QE3, that's the chair. We get past that, the risk rally is in full flight again, and the market looks in the home straight.
The risk rally is in full flight, and to pick up on your images there and your metaphors and fairy tales, maybe the Emperor does have some clothes, at least a pair of boxer shorts.
Something is covering his modesty at the moment, Jamie. Whether that remains in place remains to be seen. I mean, you do have the moral hazard here, where Mr. Rajoy is already standing up and saying, I'm not sure I need to do anything with these yields where they are. Well, these yields are only where they are because the market expects him to do something. The market can turn. But as it stands right now, the euro does look bid, and it would be a fool to argue with that.
So what are the numbers you're looking at? What are the levels on the euro that you're looking at on the upside specifically?
Well, first thing this morning, people were talking about the 129.35 level, which is a 61.8% retracement of the entire 2012 move. We basically touched on that. We're hovering around it now. And then it's barrier time. We got 129.50s and then the big ones, 130 and 131. It's a great barrier reef up there. The market may want to take it on. I'm not sure the periphery will be too keen on this euro going up the way it is. I mean, it was on 121 back in July. That's eating into their ability to sell.
A big jump. We'll hold that thought, Neil. We've got Barclays Capital technical analyst Phil Roberts coming on to talk about the dollar index, and he sees that lower, which obviously means higher euro dollar.
The 52-week average has performed really well over the last 7 years, and invariably, when you break that average, there is follow-through. So we would see a low close in the dollar index this Friday as triggering a move back down to the February lows, which in euro dollar would equate to a move towards the 133, 135 area.
Well, Neil, if the periphery are having problems coping with 130, 131, what about 133, 135?
It's the last thing they want, Jamie, but at the end of the day, you have to assume that if the market wants to believe, and it does believe in the Draghi put, then the euro will gain some traction. And it's unfortunate, but they're just going to have to live with it.
OK, let's finish up with dollar yen. If what you say and what Phil says is correct and the dollar is heading lower, especially after Thursday, Ben Bernanke, are we looking at Japanese intervention?
The dollar yen has been an uncomfortable move in the last 24 hours for the Japanese, no doubt about it. It took a while, because Mr. Azumi took a while to get his bearings, but we've had the comment that they're going to push it back against speculation. The bottom line is the dollar yen market was long going into Jackson Hole. It was long after the ADP numbers, and we're still seeing the unwind. Everybody's got stops through 77.65, and then there's a gap on the order board before we get to 77.10 level, where people are putting bids in expectation of the fact that the Ministry of Finance will not want to see dollar yen trading on a 76 handle. Now that remains to be seen, and much of that will depend on what happens with Mr. Bernanke. But there's one other aspect of this, which Japanese banks probably aren't seeing firsthand. Back in 2010, when China and Japan fell out about those disputed islands and a couple of Chinese fishermen were arrested by the Japanese, the Chinese got angry. It was a diplomatic incident, but part and parcel of it was a strengthening of the yen, which was an untimely reminder to the Japanese that China has the ability to buy Japanese currency and discomfit Japanese exporters with negative consequences for the Japanese economy. I would suggest, from what I'm hearing, similar flows have happened in the last 24 hours, and Tokyo will be understanding this now. I understand the Bank of Japan has reached out to a lot of non-Japanese banks recently in the last 24 hours to try and find out about the flows. That's not going to be very pleasant reading in Japan, but there's not much they can do about it. So there's another reason there why the yen could remain strong.
Another angle on the China-Japan, if not confrontation, dispute.
Indeed.
Neil, thank you very much as always. Well, that's all for now, but do stay with Reuters. As Europe unveils plans for banking union and supervision, we'll bring you live commentary from Commissioner Michel Barnier, who outlines the proposals at 1300 BST. I'm Jamie McGeever. This is Reuters.